the November 12th Ways and Means Committee meeting. Roll call, please.
Chairwoman Sims.
Here.
Alderman Gould.
Here.
Alderwoman Tice.
Here.
Alderwoman O'Neill.
Here.
Great.
Great, thank you. Item number 2 on the agenda is approval or amendment of the agenda. Does anyone have any proposed amendments to bring forward? Any objection to approving by acclamation? Okay, the agenda will be so approved. Item number 3, there are no announcements, appointments, proclamations, or recognitions. Item 4, citizen comment. Do we have any citizen who wishes to come forward and make a statement to the committee?
We have no citizens with their hand raised at this time.
Okay, well, there'll be an opportunity after the meeting to make a comment should someone desire to do so. Item number 5, reports of committee chair and alderman. I do not have a report. Alderman Gould.
No report.
Alderwoman Parker Tice.
No report.
Alderwoman O'Neill.
No report.
Thank you very much. Item 6 on the agenda is the city administrator's report. 6A is insurance services consulting scope of work discussion. Olo, are you leading us off with that? You're on mute.
You're muted.
Jason Coates, HR manager, is doing that. Jason?
Ma'am. Okay, so I just wanted to kind of review briefly. I'm not going to go into reading the entire thing, but go through the insurance consultant proposal, the RFP that we put out, and give a little bit of history on this. Back in June, we had a Ways and Means Committee meeting on June 4th where there were some concerns raised with regards to the level of coverage that we had, and we wanted to make sure, or the committee rather, wanted to make sure that the coverage that we had was sufficient to meet the risks that the city would potentially incur. It was initially brought up by Alderwoman Sims and then Alderwoman Tice, then kind of changed the direction slightly and asked for an audit of the coverage that we have, which more or less led to the RFP that we put out. The directive of the committee at the time was that this was more or less non-slate related insurance, and as such that then would cover things like the public officials insurance coverage, property and casualty, auto liability, overall liability, and EPLI or employment practices liability insurance. So we put out the proposal. We ultimately decided on the firm. I've got the representative of the firm here, Mr. Simonson. There were a couple of questions that had been posed by some of the board members that are in attendance and one that had not been in attendance. So I want to give Mr. Simonson the opportunity to kind of discuss some of those issues or those questions that had been raised and give the board members the opportunity to kind of clarify the scope of this particular project. But again, I just wanted to make sure that we were all on the same page with where we started from. And I will kind of turn it over at this point to Mr. Simonson unless someone has a question for me.
Any members of the committee have questions before Mr. Simonson leads off? Okay, Mr. Simonson, you have the floor.
I think he still needs to be unmuted. There you go.
Well, thank you for having me here tonight. We're excited to work on this project for the city. And, you know, we really just want to have a dialogue this evening and make sure that we can provide a deliverable at the end of this that you guys find useful and hopefully get some of your questions answered about the city's insurance coverage. The plan, generally speaking, is that we have and are in the process of getting all of the coverage documents for the city for all of the major lines of property and casualty insurance. So that would not include the workers' compensation or the health benefits, but everything else is included, and I believe we have gotten all those documents. What we will do is we'll read through everything. We will put together a coverage review in a spreadsheet form that kind of goes through the standard terms and conditions and marks down what is covered and what isn't and where it's covered in your various policy documents. We'll also do some benchmarking and compare that to terms that we see in most other insurance contracts of similarly situated entities. And then we'll provide a report to you guys, kind of summarizing our findings and maybe some pointers or thoughts to consider when looking at your insurance program and how the city is managing its risk. With that, I guess I'll stop and answer any specific questions that you guys have.
Anyone on the committee have a question? Alderwoman Tice?
The screen makes it hard to see the raised hand. So thank you for being here, and I'm excited, Mr. Simonson, for the work that you and your firm are going to do. I do have one question about the coverage. Are you going to evaluate, like we're part of Slate and they have fund balance, especially like workers' comp and liability fund balance, and will you be evaluating that to see if mainly just to see if there are any threats to us as a city with the level of fund balance that's there?
So we will look at generally the differences between a pool or an associational trust, which is what Slate is, versus private insurance, and some of the pros and cons of those, including, as you said, is can you be assessed? The other considerations that you would take into account. We will not be the scope of this project does not include any sort of audit of Slate or any looking at their internal financials.
So if they're, I guess I had a question when I read some public documents about Slate and the financial reserves, and I just wanted to see if the low financial reserves had any impact on, would have an impact on the city. Like so I guess I don't want an audit of Slate certainly by any means, because it's not what we're asking, but I'm more concerned about if their reserves got to a level that would cause concern to us as a municipality. So that's the angle. I'm not questioning Slate or joining it or anything, just sort of that angle of it.
Right. So we have a list of things that we look at for risk pools. What are the terms of assessments? How can the members be assessed? We look at what impacts the pool will have on you or could have on you, including if the pool were to fail, what would that look like? But in terms of the specific health of any of the fund balances that Slate has, that would be outside the scope of this.
Do you have general guidelines of what you feel like are healthy reserves and these kind of trust agreements or trust arrangements?
So we have done that type of project in the past. Normally that type of project, so there's two main types of insurance projects that we do. The first one is a coverage review. And that's kind of what we're looking at doing for Brentwood. And what that is you guys want to know, what do you have? What are the terms, and how does that look generally compared to other entities? And that's usually a good first step of, getting a better understanding of your whole risk management program. Are we transferring it appropriately? What are we keeping on the books? If we're transferring it, where's it going? And how do all those pieces fit together? Specifically for an entity like Brentwood, where some of the coverages are with one carrier, Slate, and some are with another carrier, which is the private company that does the public officials and the employment practices. And so you want to look at how those fit together. We also do another project, and sometimes it comes, after we do a coverage review. Sometimes that they come out of the blue, but it is more of it's what we call a marketing project. And that's where an entity says, we want to go out and find out what insurance we can get and how much it will cost. And so you would go out and we would do an RFP, and we would say, we're looking for insurance coverages, bring those coverages to us and let's take a look at it. When we do a project like that, if you have a pool who's submitting a quote, we will specifically look at that pool and what the financial condition is of that pool, because you're considering that compared to, other entities or other insurance options. And so it's kind of like, well, we need to decide if we're going to get in this pool with them and what the financial obligations are. But in this case, I think I may be speaking out of turn. It's ultimately up to your decision. But I think the first step is really understanding what are the terms of the pool, what are the terms of withdrawal, how do we get out if we want to get out, and how does the coverage compare to, private insurance options or other things like that. Again, that will be a general comparison from what we see in the market versus, hey, we have a quote from Travelers here for law enforcement liability. Let's take it and line it up side by side with Slate and see which one we like better.
Yeah.
Sorry
I
if that's too much information.
Yeah, no, I mean, I see what you're doing, and I guess that's what we've asked for, and that's the first step. I think the piece that would make me feel more comfortable is just knowing that the pool at Slate is in a healthy position, so that liability, a liability wouldn't come back to us. I'm not proposing that we go out and shop this. I mean, that's, I'm not pushing that. I just want to make sure that what we're a part of is healthy and that there aren't, financial concerns to the city if there was a big settlement somewhere else that we would be assessed and what that risk could be. So I guess I'm looking at that risk, and that's really not what you're giving us with this project.
What I can say is that I can talk, the project will include what the assessment terms are for the pool. In what circumstances can they do an assessment? Okay. In what circumstances can they give a credit back? Obviously, that's another, it cuts both ways with pools. Right. And if they have low losses, they will give the members money back. What are the terms of those, and when can those occur?
I think one of the things, just as a basic concern we have, is do we have adequate insurance? And if the bill comes due, can the insurer cover us? And is Slate in a position, and I view financial solvency as a point of adequate insurance. We need to be, will you be able to ascertain whether they have sufficient resources to cover a loss in light of the losses that they've had to pay in recent years? Is that something you will be able to determine or give an opinion on in terms of your things to consider?
We would not be able to determine that because we don't have access to their loss data.
Well, Bola, do we have access to their loss data?
I have access to it.
So will we be able to bridge that gap?
Excuse me?
Will we be able to supply?
Sure, absolutely.
So does that address your information access issue?
I would be surprised if you have access to all of their loss. You have access to your loss data or the entire pool's loss data?
Just the city's loss data. Right.
So since you're sharing risk with the other members, one of the things you need to look at is the total reserves, the total losses, the total projected losses for the entire pool in order to assess the financial stability of a pool.
So, they are, because the members are municipal government, I don't think I need to make a formal sunshine request for that. It's a matter of talking to Steve Wicker to get that information. So I guess the question for me, Peter, is this part of the scope?
No, it's not. And I would honestly be surprised because I haven't had a pool give us that data of another one that we've worked with, because it's they don't want to share what they have if they have a law enforcement claim that they have on the books and they have $1 million reserve on it because they think they're going to end up paying $1 million on it. They don't want that information out in the public. So most of the time, loss data is not publicly available, and as insurance carriers do as well. kind of hold on to that information pretty tightly. One thing we do is we do look at the audited financial reports, the CAFRs. Those usually have some aggregate loss data in them, so you can kind of look at the projections. And that's something that we have done in the past when we're doing one of those larger marketing projects to determine kind of the stability of the pool.
Well, I don't want to convict Slate of not providing information before they've had an opportunity to respond to such a request. But it would seem to me if we needed to go into a closed session, I mean, we need this information to evaluate our position. I'd like to see as far as what we can get and to identify what they won't produce. I mean, is that something that we can work through, Peter or Bola?
So it seems to me fundamentally, these questions pertain to a different RFP. They don't pertain, and Peter, correct me if I'm wrong, they don't pertain to the scope of work for this particular RFP. So if the board would like us to engage Charlesworth Consulting for a subsequent project, we can. But it doesn't seem to me that this line of questioning really pertains to the scope of work for this particular RFP. Do you understand what I'm saying?
I guess I'm confused. Certainly understand what you're saying, but I'm confused that it wouldn't. I mean, we want to evaluate our insurance. Is it enough? Is it adequate?
And there's specific insurance products that we've listed per that meeting that Jason references that was a basis for developing this RFP. So now if we want to look at the financial stability of Slate, which goes to some of the same questions that have been asked of myself and Steve Wicker, then that's a different work product. Apples and oranges.
I guess I don't see how it could be apples and oranges because the ability of an insurer to pay goes to the coverage. I mean, if I can write you an insurance policy for $1 million and say, yeah, sure, I'll pay it. And if I can't pay it, it's not worth the paper it's on.
If I may, when I went back and I reviewed the Ways and Means from June 4th, the reason that Slate was specifically excluded was because of what you had asked for, Alderwoman Sims. And that was at about the 44 to 47 minute mark on that June 4th meeting. You specifically said not to look at the Slate related products, and now we're kind of asking.
That's not how I remember it. I remember we have health insurance and we have workers' comp that remain with Slate. But the idea that we can't adequately evaluate our insurer and whether it's solvent and whether our coverage is adequate. I mean, so fine, let's not dwell on it. Let's fix it up. I mean, what needs to happen? That needs to be, or jump in committee if I'm wrong. I mean, I think this is part of what needs to be evaluated. And so I'm surprised that
that's another RFP. That's not the one we issued. And we brought this RFP to the Ways and Means Committee multiple times. So
and it wasn't expressed, then it should have been fine. Then we'll, you want to put some egg on my face, I'll live with that. But I understood that we were doing a coverage analysis and that would included in that would be, of course, an insurer's ability to pay. So, I mean, what needs to happen?
we need to go back to the drawing board and issue a separate RFP for the line of questioning tonight. So the question is, does Charlesworth go forward with what this RFP calls for or not?
Well, what exactly is I guess I'm not understanding what he thinks his job is to be doing. I mean, I don't understand how you can do an analysis of coverage if you don't have information as to whether the insurer can pay.
We provided, go ahead.
The coverages in question were specifically those that I mentioned a few moments ago, not the coverages that you're now asking for. The coverages specifically were for public officials insurance coverage, property and casualty, auto liability, liability, and EPLI. If you're wanting them to look at workers' comp or any of the other coverages, that would be a separate RFP, as Bola had indicated.
No, that's not, I've understood that we are married to health and workers' compensation. What I'm saying that when you do an analysis of whether you have adequate insurance on the liability component, how can you do an analysis if you don't have an understanding of whether the person who's drawing the insurance can actually make good on, can actually pay for the coverage? So I don't, to me, that goes part and parcel with coverage. I certainly purchased my homeowner's insurance in reliance that they'd be able to pay if, you know, my roof collapsed. So I guess I'm not understanding the misunderstanding, frankly.
So, you know, so risk pool, it's not insurance. It's a group of individuals or entities who get together and they're sharing their risk. It's not insurance. They call it insurance, but it's misleading. It's not insurance. And so when we do a coverage review that includes when we do a coverage review, what we're looking at is what are the terms and conditions of the coverage. So for example, I know there've been some discussions about class action lawsuits. Are those covered? Are those not covered? Under what policies would they be covered? What are the limits that would be applicable to some of those hypothetical claims? You know, we have a list of things that we look at for types of coverages that we typically see. You know, are there sovereign immunity provisions in there? Do they waive those? Are there coverages for sexual molestation and abuse? We have a whole list of things that we go through and look at the coverage documents to determine what the coverage is and where under those policies it's covered. But in terms of assessing the financial stability of the either insuring entity, you know, which you don't really have to do because insurance companies are rated nationally, they're rated and they're regulated by the state. So when you buy, you know, insurance from AIG or Travelers, it's coming with those ratings. But the coverage analysis does not include the analysis of the risk pool itself and its ability to pay.
That to me seems like giving a borrower a loan and they promise that they'll pay you back, but not doing any kind of analysis as to whether they can actually pay. I mean, I have concerns. I'm kind of monopolizing. Does any member of the committee have any? Alderwoman Tice?
So I guess I'll, you know, like as Sunny said, she'll take the egg. I'll do that too. I mean, I read this. I participated in that June meeting. I guess I sort of assumed that a coverage analysis also included a risk analysis. So that's where I think I just assumed that was part of it. So I don't know what the right answer is here, because I think the information we're going to get from this RFP will be helpful, but it's not all the information that I think we want. And so do we fix that now? Or I mean, I don't even know how that works because we already voted on this. Or do we expand the scope now? Do we wait and see what this is and then do something later? I don't know what, I'd like to sort of deal with this and move on. And so
yeah, and we're happy.
How do we do that best?
Right. I mean, we're happy to do whatever the city, you know, decides to do. We can, you know, we're flexible. We want to provide you guys something that you find useful. But, you know, we can't guarantee the financial stability of the pool. You know, we're not actuaries or accountants in that respect. We do risk analysis. We do coverage reviews. We live in that risk management world. If you're looking for somebody to really dig into the financials of Slate, then, you know, perhaps an accountant or something like that would be something you would like to look at. But I mean, we do assess risk pools in comparison to private insurance and addressing the concerns that you have. Ultimately, there is no guarantee in a risk pool because it is a member, it's a member group, and it can be assessed. So there is always the risk that if the pool goes belly up, that somebody's walking away either owing money or there's not coverage available. That is one of the downsides of pools. Now, there are many pools that are exceptionally well run that have been around for a long, long time. But we have seen pools fail as well. So, they're just, they're different, and risk pools aren't for everybody, but for a lot of entities, they're a great option.
I mean, I know I would like to be able to say to people, well, we're in Slate and it's great and it's financially stable and it's cost effective. And I don't think this evaluation we're going to get is going to let me go out and say that.
In terms of fixing this up, what is more efficient? Hitting the pause button and doing an RFP, having you do your, what you understood to be the scope of this work. I don't want to have to, do we just add the scope and do we expand the scope now and move forward with an expanded scope, or do we go forward as is and then do this later? But I think it's important that we be armed with something that gives us an understanding of the risk of being in this pool and evaluating that in the context of whether our coverage is adequate.
The risk of expanding the scope was the fact that we did a competitive bidding process and we had multiple individuals, multiple firms submit a proposal. So if you decide to engage and expand the scope with Charlesworth, I would imagine you'd hear from the others who were not given a chance to bid on it.
Right, and so my question is, do we just hit the reset button, or do we let them finish on this limited scope and then I don't want to.
That's a decision for the board. It depends on if you think that the purpose and the goal of the initial RFP is still there. If it's not, then there's no point in spending $4,000 plus for this when this is really not the intended outcome the board wants. So I'll say that and leave it up to the committee to decide.
I would just throw in.
Oh, sorry. It was my computer frozen.
I would just throw in something else too, is that if we did an assessment of, and again, I don't want to disparage Slate or anything, but if we did an assessment and then said that there were issues, or, we couldn't with confidence say that there was a lot of financial stability in the pool, you would still need to know what the coverages are and what the terms of withdrawal are and how you would get out of the pool in that event. And then you may learn that information and not have any alternative coverages available. That's why we normally do that as part of an assessment of options. We do it as a marketing assessment where it's like, well, we don't think that the pool right now is maybe the greatest fit, but we can do this other thing instead. So you're kind of making a decision of this or that rather than just, this isn't great, but we're in it and we may not be able to get out, or we're just kind of stuck in it. I'm just kind of talking through some.
I don't think anyone is ever stuck in anything.
No, I know that, but for example,
we've had Steve Wicker and I and others from from Daniel and Henry come and present to this committee that if the city decides they want to pull out a Slate, there's a mechanism to do that. So that Correct. Is always open to the city anytime to pull out a Slate. What we've been told is that debt or assessments rather for prior years that they've carried on the books, the city would still be liable for it. That's the only thing. There haven't been any special assessments in the 30+ years that Slate has been in existence. However, things have changed, and in the last 4 years, 5 years, there have been class action lawsuits, and so there's greater liability. And we've shown that the health fund or the health premium or health section of Slate is more robust. The fund balance is more robust than workers' comp. So the liability is also on workers' comp and also on police liability. So, but if the city wants to pull out of Slate altogether, healthcare, workers' comp, and the products that we issued for this particular RFP, there is a mechanism to do so, which is why I asked maybe 2 meetings ago, thinking that this conversation will find its way back to this committee, that January is coming. So we need to start thinking about either giving notice. I mean, the fact that we give notice perhaps doesn't necessarily mean come July, we have to leave Slate, but at least it gives this board all options to consider. So, come July, we're not in a crisis mode.
Well, let me put it another way. I feel like we ask questions about Slate and its viability, and all of a sudden you're talking about withdrawing. I want us to be able to have the information and the facts and the data available to determine, to make an educated assessment of whether that is I have no idea if that's the appropriate course of action. And I want us to get the information. So if we decide to stay, I can say we ran the traps on this and we made it, and based on the facts and the data, we stayed in. But that we're not, I want to get off square one and be able to get that information to make a determination. And so I don't know what language, if I'm not speaking insurance language adequately, then let's coach me up. I mean, what needs to happen in order to be able to adequately determine whether our liability coverage is appropriate. And in that scope, it's not just coverage, but ability to pay.
So I would say there needs to be a motion that reflects what you just said. So we go back out, because this RFP does not cover what you just said.
Is there any other magic language I need to, is there any other subtopic or specific topic that should be identified and addressed so that if that comes to a motion and if that's voted on and then we just proceed down the road, I don't want to look back and think, whoa, well, you didn't talk about, I don't know what. I mean, I don't write insurance, but I'm coverage, ability, and I understand coverage to be financial solvency, ability to pay in addition. I saw some hands, so I don't want to.
Yeah.
Alderwoman O'Neill?
Yeah, I think maybe I'm looking at it differently than you are. We set out to look at coverage to see if we were adequate to meet what we need to do. And I think we all made the assumption that whoever we work with would be viable. So obviously you should not assume anything. My feeling would be that we should go ahead with this. We're set this, we have to look at coverage anyway. Let's do that. And in the meantime, then we can decide if we really want to do an investigation of Slate. And when we get the results of this, then we'll have a direction of where do we want to go. But we're contracted for this. Let's go ahead and do this. And if we need to do something for the 2021 budget to adjust that for funding for a separate investigation, then that's a separate issue. But I guess I could make a motion to continue with this as originally set.
Well, before we make motion, I don't want to cut off questions on with regard to what we were talking. I mean, certainly I'll entertain any motion as they come up, but are there other Alderwoman Tice?
Well, I don't want to just spend money to keep studying things, but this has been going on at least a year. And if we do this study and it doesn't give us what we want, and then we do another RFP, and then we look for more information. I mean, this seems like we clearly, you know, the non-insurance people didn't communicate adequately at that June meeting exactly when we went, nor did, I'll admit that I didn't follow the RFP closely enough to understand that this risk analysis was not part of the insurance piece. But, you know, I don't want to come back next November and still be talking about this. I would love to see what we have and see if, I mean, it's one thing to make, I mean, we need to understand how we're insured, but we also need to understand that there's some ability to pay if we're sued. And we're not finding out that second piece.
Is it cheaper to just go expand, do another RFP? I mean, I don't want to, I mean, that's what I'm wanting to have some information to evaluate whether I agree. I don't want to just study to study and that, well, he's not really able to, you know, do his job, do his report because this piece was missing. And if it's so run along together, I want to have vetted that.
So my thought is, and again, it's totally up to you guys. You have to provide the notice by 1/1, I believe. I think it's a 6-month notice of withdrawal. So, and I don't think that even if we were selected right now, I'm not sure we would be able to do any sort of analysis of Slate by that date. So it would be, you would be in for a whole nother year, regardless of what the finding was, or what the assessment came back as. I also would anticipate it taking a while to get the documents. I just pulled up here. It looks like their CAFRs come out, their audited financial statements come out in February. So that's when you'll likely be able to get the 2020 the audited financials, which is what, we would probably be the basis for the starting point of looking at Slate. The coverage analysis, we were on pace to have that done by the end of the year and have that information back to the board of aldermen to have that project done by the end of the year. The coverage the analysis of Slate, they're really separate projects, so we can bifurcate them. It's not a huge deal. If you want to include them together, that's fine too. But I think one of the terms, Alderman Sims, you asked what would be a term of art. If you're looking for a seal of approval on the Slate's financials, there's a couple layers of that. There's, hey, we looked at it. It's similar to other pools that we deal with. They insure this many entities. Here's how much their risk is based on their losses. We see a ratio of this normally, which is typical. Their, revenue exceeds their reserves by X amount, blah, blah, blah. That's the stuff that we normally do. If it's a really dig into the weeds thing, the term would likely be, you want somebody to audit Slate and give you a, financial, an accountant's or an auditor's review of it. I'm not aware of any members who have asked for audits of a pool that they're a member of. And I also I would be concerned in doing that if, like you said, you pay us to do this project and then we can't get the documents that we need to do the project. I think we could get the documents that we need to do an analysis of the pool and just kind of say, hey, here's where it's at. But in terms of really digging into the details of it, I don't know if that's publicly available information.
Well, there are a couple things going on here. I would think that it would be available to us by virtue of being members of Slate. And I would think if we needed to go into a closed meeting, we could. But are you saying that there are two sort of distinct projects? That is your coverage fine and I think creditworthiness, risk evaluation. I mean, I go back to the analogy of, a borrower's promise to pay. It's not just, I promise I'll do it. It's, I've looked at your credit score. I've looked at your assets. So in addition to just being, taking you at your word, I have this other information to evaluate you. I think that's an important component. I'm not to the part of where I want to say we leave Slate. So I don't know how we go from talking about analysis to that. But is there, if what you're saying is they're two distinct projects, I would feel comfortable with going forward with what you're doing. And then, we can take up I'll call it financial analysis. If there's another industry term to use, I don't want to be in this situation again. So if there is unique language that's to be used, I would like some help with that. I want to be able to determine, Slate's ability to pay something, if the bill comes due, that they can do that. So
So Peter, you indicated before that what you seem to be hearing tonight is an audit of Slate. Is that what you would be doing with what this new request sounds like? Is it something that you can do all by yourself, or should we be doing this in concert with an audit firm?
We do not do financial audits of Slate or of any pools. We don't do those. You would, if that's the level of analysis that you guys would like, then I would suggest you call it an audit and get a accounting firm to do it on that part. And that's, again, separate from the insurance policy portion of it and the risk analysis of it. If you're looking for, something more general that we typically give in a marketing project, then, we're happy to provide that. But it's really just what the board is looking for and what their concerns are.
And can you explain again, what is a marketing project?
Yeah, so a marketing project would be in a situation where an entity says, we're going to go out and see if we're getting good value for our tax dollars, and we want to go out and market one or all or some of our insurance coverages. For example, let's set Slate aside for a minute. Let's take your property policy. And you say, we want to see if we're getting if our property coverage is good and if it's market rate. So we would issue an RFP, and then you would have multiple brokers bid on that, and they would bring us quotes. Then we would look at those quotes, we would compare the coverages, and then we would say, here are the differences, here are the suggestions, and then the city could make a decision of which of the options that we got they wanted to procure.
Alderwoman Tice.
So if you did the marketing analysis, would that include some coverage analysis with what we should have, or would you sort of by default, by getting different proposals, be comparing what kind of coverage, like what we're trying to get with this project that apparently we've bid?
Yeah, we do that because for two reasons we do it. Number one, we're comparing them. So you get a spreadsheet that shows the coverages. And then the second part of it is you will get a spreadsheet. We have to put the specs out in the RFP. So we draft the RFP and we say, City of Brentwood's looking for this. Here's their total insured value of their property. We don't want any quotes that have a deductible higher than X. We want to make sure we have A, B, and C coverages and the sublimits on these. We want them to be this. And so in order to build out the specs for a project like that, we would we would obviously have to review your current policies. So here, and this may be too much information. If you would allow me, maybe this will help if I show kind of what I'm talking about here. Would that be okay?
Yes.
Okay. So this is, can you see that spreadsheet there?
Not yet.
Yeah, oh, there it goes.
So this is, I've already started on it, but I mean, it's not a big deal. If you guys decide to wash it, that's fine. So this is the coverage analysis that we do. And, you can see here, so we put on Slate, we have all the terms and conditions here. All of these will be filled out specific to what the policies say and what the coverages are. Here are all the standard terms and conditions that we look at for our public entities. We'll go through every one and say, you have this, you don't have it. You don't have it, but it's not a big deal. You don't have it, but it is a big deal. All that sort of stuff. And we do that for the property, the property. Here's a property spreadsheet, liability, we do it for every line of coverage that we're doing the project for. And so now this one is a comparison. So you see here, we've got some different quotes. So this would be like, if it would look like for a marketing project, we've got a couple quotes. Yours will just be the one column, and then we're going to have a second column that's benchmarking. So here's what we normally see. We normally see, most entities carry $3 million of coverage of limits. We most of the time see that they do have, this sublimit, that they do have PIP, or they do have med insurance, med pay coverage, all those types of things. And so that's kind of the work product that we get. And as you can see, this, other than the title on top, doesn't have anything to do with who the carrier is, whether it's Travelers, Chubb, AIG, or Slate. It'll be, it's kind of the same. When we write our report, the written report that comes with it, we'll walk through all of the terms that are unique to the bylaws of Slate, to the association. I think they're called Articles of Association or something. I've gotten those as well. And we'll kind of walk through that, as a member of Slate, here are your withdrawal provisions, here's how it works, blah, 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 and then put all that together in the written report. So you're getting the coverage analysis and then the specific provisions that are related to being in a pool. Because if you weren't in a pool, it would just be your coverage terminates on X day and then they're done with you. So because you're in a pool, we do a little additional analysis of that and kind of talk about risk pooling, what it means, and then the specific provisions of Slate. And then when we come back, and then obviously when we come back, we'll walk through a high level of this and have a conversation with you guys, answer any questions you have about our report and about our coverage analysis, and, educate you until your ears bleed about insurance.
Will your analysis include this class action issue that was referred to?
Yes. So, yeah, and one of the things that is you're going to have to look at is your insurance or your risk management is like a puzzle, okay? And you want to make sure all the pieces fit together. But in this case, you've bought some of the pieces from one manufacturer and some of the pieces from another, because Slate does some of it, and then obviously some of it is on that other coverage line. So we will look and make sure if there are any gaps in those coverages and how those line up. But with a class action lawsuit, any lawsuit, whether it's a class action or not, a lot of it is going to depend on the specific allegations that they are making and the specific way that they plead their case. So you could have a claim that comes in and is a class action. You could have a class action that comes in and it's clearly excluded under the law enforcement policy. And so any counts related to your police activities is not going to be covered. But if it's related to either your municipal court practices or your public officials or those sorts of decisions, it could be covered under your other policy. So it's going to depend on the nature of the claim, but one of the things we want to look at and one of the things we will discuss is what claims are covered under law enforcement activities? What is the definition of law enforcement activities? What does that include? And what exclusions are applicable to that coverage? And then what exclusions are applicable to your public officials coverage?
Is there a way to drill in, and I don't know how best to express this, maybe let's assume that the attorney that would be representing the putative class or the plaintiff is artful and has a lot of knowledge of insurance policies and will be sure to plead himself into coverage. I understand, I mean, with even in my limited knowledge base of that kind of work, I mean, I know you don't, you call it negligence, you don't call it fraud.
Right. So yeah, so what they're gonna do is they're gonna spray a wide net, and you're gonna get drug in on both sides. Is likely what's gonna happen. You're gonna turn it into both your public officials carrier and the pool, and then they're going to likely fight amongst themselves. They will also point the finger at each other and say, this should be covered by you. This is not covered by us. And then they're going to talk about who has the duty to defend. But hopefully you get defense under a reservation of rights, which is where they will take up the defense, but they may not ultimately pay the claim.
And will you explain that to us or walk us through our coverage?
Yes.
Okay. And I just want to make sure to recap in my brain, what you can do and what you can provide us is an analysis of coverage.
Correct.
But if we want ability to pay, we're going to have to, and I'm calling it an audit, and I don't know if that's the correct term, but we are going to have to do an RF. That is covered by a separate RFP. Or it would be. Is that, I want to make sure that I turn over these stones now, so
right.
there isn't confusion or ambiguity in the future.
For our project, we're going to assume that Slate can pay a claim that you turn into them, if it's a covered claim.
And if we want to address that assumption, we're going to have to go out to bid again. And we'll take that up with the board and deal with that is that, am I understanding it correctly?
I mean, I don't know if you have to go out to bid again on it, but it would not be included in this project. The scope that we've done for the however much it was, that does not include that part.
And this marketing analysis that you referred to earlier, are you going to be doing that? Is that where does that come into play?
We did not request that.
Right. So that would be something that we could do at a later date. Some entities have us do it, for example, they hire us every 4 or 5 years to do it because they say there's some legal requirement that they go out to RFP every 4 or 5 years on it, or there's a state law. There are laws in certain states that require you to do an RFP and have an open bid on that sort of stuff. And that's a separate project as well. It is complicated somewhat when the entity is a member of a pool because of the withdrawal provisions. If we were doing a marketing project and your insurance just expired on 7/1, we could do the marketing project for you in the spring. We could get a couple quotes so we could see what we wanted to do. And if we want to stick with the current carrier, fine, we would renew it. We're not going to be penalized really by doing a marketing project. But when you're a member of a pool, some pools say, if you provide us notice of withdrawal, you're out. You can't come back in. And so, and to Bola, I just don't know. I haven't looked at it yet, what the provisions are for Slate. If you're out, you're out. And I also don't know if it's, hey, we could leave on the property casualty side, but we can still stay on the benefits. I don't know that.
That question has been asked of Slate, and the response has been provided to this body. So
Okay.
They know the answer to that.
Yep. And then, but the other thing is you will not be able to get private insurance quotes 6 months out, especially on the property. They'll probably only quote 120 to 90 days is probably pushing the outside limit. So if you wanted coverage effective 7/1, we wouldn't be able to get a hard quote from anybody on your property program until probably March. March or April, just because they can't underwrite a risk that far in the future. So again, I think you'd probably want to
Wait, so
have a good
just so I'm
understanding.
clear, you
Sorry, go
said
ahead.
the 6-month notice provision to terminate with Slate, we would be faced with having to do that without knowing that the insurance would place it with, because we couldn't get a quote within 3 months of actual ability to get that insurance.
You would have to have some feelers out, but you would not have a quote in hand. You would potentially have to jump. Now, I've never had an entity that couldn't get insurance, a public entity that couldn't get insurance.
It's just the ability to pay whatever that new
Right.
premium is.
Right.
Right. That's the risk.
So I'm not trying to muddy the waters with this marketing thing. So we're not doing that, or should we do it? Or I'm confused as to where that is fitting into this discussion.
That was just a conversation that we had where that was what I was saying. When we look at a pool and the ability of the pool to pay, as you said, we do that analysis as part of a marketing project. We do not do that as part of a project for a risk analysis, which is what we're doing here. And I think because of the uniqueness of Slate and the lengthy withdrawal period, at least unless you guys are, I think you'd want to do these other things you're talking about doing, the analysis of the financial ability and a coverage analysis before you would even consider doing a marketing project, because it's not going to be an easy project with the withdrawal provisions and with you being in Slate. Does that make sense? You would want to be leaning towards leaving if you were going to do a marketing project. But if you were leaving, that's how we could help you do that. Is we would do an RFP, we would get insurance quotes, we would find a home for you, we would deal with the brokers and all that stuff that bring the quotes.
Okay, I think I had a light bulb go off on that topic.
Yeah.
So thank you. Are there other questions?
There were a bunch of questions that were submitted, and Jason, I asked you to share it with Peter, and I don't want to hurry anybody. We're at 6:30, and we haven't had a chance to hear from Linda Higbee, and there's a Public Works Committee that starts at 7. So in terms of just managing the 30 minutes left, should we maybe figure out whether the committee feels comfortable going with the initial RFP, or let me dial it back. Answer all the additional questions, because Alderman Plufka submitted quite a few. Alderwoman Parker Tice, I don't know whether you've gotten responses to any of the ones you submitted. So there's that's left out there. And then how do we move this forward? Either go with the RFP that we have, and then based on what Jason and I have heard tonight, maybe issue another RFP that covers financial and risk analysis, which would mean Charlesworth and Smith Wallace could respond, as well as an audit firm. So I'm seeing multiple entities responding to a second RFP.
Well, in terms of timing, we're not really making changes to our insurance within, and so in terms of emergency, is this something that we could put off to the December meeting and take out more into? I mean, we're not, or are we?
There's no rush. There's no rush.
So I would just.
I mean, I say that. I don't know whether you all feel that.
Alderwoman.
So I think Peter answered my questions that I had, other than the ones about Slate, which are not in the scope of what we're doing. And it seemed, I just glanced at Alderman Plufka's questions, and I think they're similar in either, I think they're answered, or they're this other evaluation of whether Slate is, has the financial reserves. So I don't know. I think I'm at the point of we should move forward with this project and move forward to the next agenda item.
I tend to agree with that. I mean, we have to get that, we have coverage, and then we'll have this financial thing that is out there that will be taken up later. So.
Okay. So we'll provide you, Peter, with additional information on coverage that you've requested. I think I've sent out an email to Daniel and Henry and Steve and everybody else to provide you those documents, and you've been working with Jason on that. And then we have another meeting next month to talk to Ways and Means to decide what the path forward is for phase 2 of this project.
Well, thank you very much for talking to me tonight, and I'm sorry for any confusion.
Thank you very much. Okay, item 9 or 6B on the agenda is the compensation services consulting scope of work discussion.
So Jason?
Okay. Again, I just wanted to kind of briefly go over the scope of services for the RFP. Going back and reviewing it, it does indeed cover not only the compensation, but also the benefits, to review our existing plans, provide recommendations for adding and deleting potential comparative organizations. We're currently looking at a significant number of local municipalities. This will help ensure whether or not those are the right municipalities, if we need to make any additions or modifications to that list, and to do an overall salary survey, as well as looking at the benefits packages that we offer. Additionally, a job audit and analysis, which would evaluate the current classification of all the positions that we have and the job descriptions of those, ensure that they are appropriately placed, titled, and fall within the proper FLSA guidelines. The job descriptions, if needed, would then be updated. We would have the opportunity per the RFP to go back and take a look if those reviews come back to get one additional revision. And again, it was looking at all the positions that we had. There were, like with the last discussion, there were a couple of questions that had been posed to the provider, which would be Higbee and Associates. I sent those to Ms. Higbee a little bit earlier in the day. She responded back. I gave those to Bola. I believe Bola then passed those along. But I wanted to at least give this group of individuals the opportunity to speak with Ms. Higbee to kind of cover any specific concerns that they have, whether or not we are still looking at the 75th percentile, wanting to go to a different percentile, whether we're going to lead, whether we wanted to split that between public safety, what have you. At least that will give her a starting point to move forward. So again, I believe she's on the line. I think she is that caller at the bottom. I will kind of step back and let her chime in, and feel free to ask questions of her as needed.
Thank you, Jason. Good evening. I just would like to be able to answer any questions that you might have that haven't already been addressed.
So the presentation that Jason mentioned, that came in, yes. Well, I have not shared that with the committee. So
you have 2 different items from me, one of which when I was on the call before, but you couldn't get to me, where there were some questions regarding the fire department and potentially using fire districts as a comparator. So that came out after the last meeting. These 2 questions really had to do much more with if you're still having trouble recruiting into certain pieces, even after the new survey and your pay ranges are updated, what do we do from there? And then the last question was really much more what kind of changes have we seen and the impact of COVID. So those were the 2 questions I got today that we've responded to.
Why don't you just explain that? Because I have not shared that with the committee.
The last 2?
Yes, I have been out of the office for most of today, so yes.
Okay.
Alderwoman Sims, are you in agreement?
Yeah, that's fine.
Okay. The question we were asked is if department heads still have concern about recruiting after the survey is finished, would we look at your salary policies? And my response was, of course, that's sort of the next step if you have some difficulty. But one of the issues that we know is potentially problematic is that if you're not using that full range that you already have to hire, and that can be uncomfortable for you sometimes, that can also be an issue. So we want to look at that at the same time, just so that you know sort of how fluid other municipalities are at this time in terms of bringing people in. Would they bring somebody in above the mid-range, if you will? if they had appropriate experience. So I think you have to look at the policy in conjunction with the survey so that you're keeping pace with what, with who you're having to compete with for talent. So that was the first question. It's really hard when I can't see your faces to know that if I'm muddying somebody's understanding.
Well,
so
if
I'm
I
going to
can
pause
speak,
for a
I
minute
asked
and
that
see.
questions, and that was really helpful. This is Nancy, and that was really helpful. So thank you.
Okay. And then the second question is kind of what have we seen with respect to pay and its impact with COVID since March in terms of what's happening. And boy, I wish I could tell you that everybody's doing X, but we are seeing a wide variety of responses, and all of them seem to be tied to the revenue stream for the cities. So the example I gave in my response is you've got a city like Kirkwood that is seeing virtually no change in revenue, and it's sort of business as usual in terms of what they're doing with respect to pay programs. We have others and others we've talked to where they have been, I wouldn't say devastated, but they're in really, they're uncomfortable with where their revenue streams are right now. And they're making some really interesting choices, and not all of them are the same, unfortunately. So I can't tell you that here's what you do if this happens. So the kinds of things that we've seen when people are having trouble with that revenue stream is we're seeing people work with or only give increases to those who are below the mid-range. We're seeing some cities that are really kind of hurting right now, and they're looking at it and saying, these are my classifications where I simply can't afford to lose anybody. So they're being very selective about giving increases. So unfortunately, you've got a wide variety of responses, and all of them seem to be tied to how's your revenue stream doing during COVID. Probably the most dramatic I've seen is I have some folks who have pushed out raises, not giving anything for another 6 to 12 months. But that's probably the most onerous I've seen, because even those who are focusing on specific classifications are telling their workforce that as soon as things uptick, they'll go back in and get their increases. They won't be retroactive, but they'll go back in and do their increases.
That was also my question, so thank you.
Okay. Other questions?
Alderman Gould.
Yes, are with this analysis, are we also going to see not just where people are but how do we compare departmentally? How do we compare as far as the mix of seniority within each department? Is that something that we'll be able to see, meaning percentage of mid-range, percentage of entry or lower level and senior, and where that breaks down from a department standpoint?
What we don't collect in the survey, and we certainly could talk when we set up the survey with Jason, what we don't collect is we collect average tenure within a particular position that we're looking at, for example. But what we can't tell you, if they have 20 police officers, for example, what we typically do not collect in the survey is that 4 of those have less than a year. This number has 20 plus years of service. If that's your question, that's atypical in terms of what we collect. We look at average tenure and the average pay at certain levels of tenure, like 5 years, 7 years, 10, that kind of thing. But we don't have a distribution curve for each of your comparators in terms of the seniority within their organization for classification.
Okay, thank you.
As part of your analysis, and I don't know if this goes in, this falls under the topic of concern for recruitment that was referenced earlier, will there be information as to, we've discovered, and I don't know if this is going to be true, we've discovered that you do have a recruitment problem and you should consider being in the 85th percentile. I have no basis to make that claim, but will your analysis include, or can it include, hey, if you upped it or maybe lower it, I don't know, this is what it'll look like. Or is it be strictly, I'm 75% and that's where we're having our ducks fall in line?
No, what we've always done for you is to take a look at at a couple of different data points, if you will. Typically, we look at the 75th percentile, but then we also come behind and say, of those 13 comparators, when we look at your range maximum, for example, or your entry point, where do you array within that 1 to 14 comparators, for example? So we can tell you that when we look at range minimums and maximums, when we look at the other cities, we can tell you whether you are in the #1 position, so you're leading for that particular job category, or whether you're kind of in the middle, or are you really at, you know, a little high or a little low. Historically, what we have found is that you have, like within your fire department, for example, they typically are in the #2 position. There's one city that generally kind of raises their maximums, but you have some other positions that even though the ranges are set, you're struggling to get them up to the 50th. So those are some of the things that you have access to when we look at it, so that you can make your own decisions in terms of, it's really not the 75th percentile we're interested in. We always want to be in that #2 or 3 position, for example. You have consistently made a decision that you do not wish to lead the market in terms of being the highest, but otherwise you have some options within that.
Okay, thank you. I have fielded, will you, and I'm not exactly sure how to categorize this. I've fielded questions, maybe call them objections, that, hey, the formula they use isn't right for, you know, evaluating my department for X, Y, and Z reason, whether it's outliers that are thrown out or, and I have no idea or no way to say that that is true or not, but can your analysis include an explanation, some additional explanation as to, you know, when we used our formula, this is why we did it, and this is why it's appropriate, or in the alternative, you know what, I went out, I did my investigation, and I tweaked it. I mean, I just want to be able to address the statements that have been made to me, so they're at least heard and evaluated. Does that make sense?
So
Sure,
before
it does.
addresses that, I want to ask you to maybe refresh your board docs, because I uploaded a PowerPoint presentation that Linda had sent earlier in the month, and slide 5, slide 6 begins to answer those questions. And Linda, take it away.
Okay, let me just give you a 2-second thing. Best practice is to use a standard deviation analysis, and it throws out both the lows and the highs. Because this question has come up at Brentwood before, historically, when we look at your 75th percentile, we run it with and without the standard deviation. So when you look at it, when you look at the data sheet for each of those positions, you have both sets of that information with you. So that objection generally comes out of your fire department. And when we looked at it, and that's the one that I put in the slides that I had prepared for the last time, you found that it basically made a few $100 difference, but your pay range was still higher. So again, you can tell us not to follow best practice if that's really what you want to do, but it doesn't always work in your favor, because you aren't just throwing out a high, we're also throwing out the lows. That's the whole point of the standard deviation. So if you have somebody who's way off the norm, they aren't included. But certainly we run the data both ways for you. We're sort of data junkies. You can look at it any way you want and then ultimately make your decision.
That was my concern, that we will be in a position to run the traps on both, and
yes,
analyze that and chew on that, and you know, but look at the numbers both ways, and if there's a philosophical change that has to happen, we'll discuss that too. But I just didn't.
Correct.
I don't know. So, all right, that was a concern that I had. Are there other questions? I'm not seeing anyone raise their hands. I guess I don't, just out of concern or out of caution, would you say that there is a material component of this analysis that's being omitted that should be raised now for consideration, since in light of our last conversation?
I don't think so. Compensation is a little more straightforward sometimes than insurance is, especially because of the component. But I think what's really key for you is that once that data is collected, it's here. So, for example, in the past, we've looked at you at the 75th and you've said, I want to see what it looks like at the 95th or the 90th. So because we collect all that data, it's not very cumbersome or time consuming to rerun it, because you're looking at it and going, boy, I'd really like to give these guys a raise, but under the current scenario, they don't get one. So we can look at all of the data. Once it's here, it's here. Our only recommendation is always that you not apply different rules to different groups within your organization. We think that creates more white noise than it tamps down other white noise.
And Linda, you will be looking at benefits as well, correct?
Correct, but what we do is, yeah, let's talk a little bit about benefits, because what we do is really different than what you guys were talking about earlier. What we do on the benefits arena is to look at whether you have a competitive package in benefits. And for us, when we look at competitive packages, we're trying to make sure that overall you are within range of where your comparators are. And you have some key drivers in that. Typically, the keys that employees especially key off of is, how much are you charging me for insurance versus what is somebody else having to pay for it? Since some people have gone to Slate, that's also something we collect. How many of your comparators are in Slate and are using that for their employee health benefits? So what we try to do is to make sure when we look at benefits, because there's a huge laundry list, that if Jason is having anybody who's bringing up certain benefit areas, if we need to dig into more detail, then we dig into more detail. But typically, for example, on a medical plan, we're only looking at things like, how much do you charge for single? How much is your employee having to pay for single? How much is your employee having to pay for family coverage, kinds of things. So we generally do not get down in the weeds of, this group covers X, but this group only covers Y. We are looking very high level at your benefit program to make sure that it's competitive.
Okay, are there other questions? All right, seeing none, I guess there's nothing, we don't need a motion from us. This is just informational, and it sounds like we've got direction, so we can go forward. Thank you very much for presenting. I guess we'll move on to the next item, which is, let's see, so there's no item 7, no item 8, no item 9, which is, so item number 10 is new business. 10A is traffic calming devices. Who's taking that?
Oh, I am. Yeah, I'll make this quick. Traffic calming devices we talked about in public safety. Many of you are probably aware there's 4 locations for radar-enabled speed limit signs throughout town. The question in public safety was, could we move one over to the area of high school, similar to where it is over at Annalee? We don't have any spare units, so we would need to borrow one of the ones that we already have, or we would need funds unfrozen to purchase additional units. So I included a quote. If we were to purchase 2 more units, we purchased 2 back in March, and then COVID hit and we froze everything. So, but we're looking at roughly $3,500 per unit, and that includes the 1 year of software. So if you wanted 2 units, we would need to somehow unfreeze roughly $7,000 to get 2 more units, and you could put one up on high school and keep one as a spare to rotate around. But just wanted to get a feel for what the committee thinks is important, and should this go to the board. We've already spent funds on other things, but this would be one of those things we would need additional approval.
Questions of the committee? Alderwoman Tice?
The traffic calming measures that you have taken in Ward 1 are probably the single most positive thing I hear from residents. So I would like to make a motion that we release $6,973 for 2 new radar feedback signs.
I second that.
Okay, there's been a motion made by Alderwoman Tice and a second by Alderman Gould. Discussion? Alderwoman O'Neill? Oh, you're muted.
The idea of things moving around makes a great deal of difference here in Ward 4. A lot of our speeders are people who come through during rush hour who don't live here. It's not people just going through on, you know, the residential streets. So I don't care how many we have as long as they're rotated and it's followed up with doing something with them. With the police, just rotating around and moving them doesn't make a difference. It's got to have police stops behind it. So I'm ambivalent about how many we have.
I'm confused. Are these fixed? These items that can be moved around?
They can be moved around. They're solar powered, so I just need a clear area to put in a post and mount those to the post. And the solar collector on the top, if you look at the handout, that's what the one looks like on McKnight. So it could be moved over to a high school, a Madge. It could be moved to, you know, pretty much anywhere as long as I have some sun that can recharge the battery. And it'll last for, you know, however long it has a full charge. Usually it's a couple of weeks. Even in dark periods, it'll still work, you know, for a few days.
Alderwoman O'Neill?
Are the rest of you able to open that on the agenda? I keep trying to open it. There's the icon that shows Bolus put something in there, but I don't get it. All I get are Higby again.
I'm the IT person, but last person to ask, you may have to refresh, and then I frequently get logged out and I have to log back in, and then that seems to work because I am able to see the memo.
I did that and it did not work. So, okay. I just don't see the pictures then. That's fine.
We'll resend it to you. Sorry about that. I just tried to pull it up and I was able to.
Looks like
Yeah,
that.
yeah, share your screen.
Oh, I can share the screen if you give me a
Share your
minute.
screen.
Oh.
Go ahead.
Oh, here. Oh, now you can't. You switched to something else.
The button that wasn't, I had it on.
Can you?
Yeah,
Oh,
so just
I've got the green. I've got the screen behind me. It won't work. I was gonna try Bolus.
you go ahead and do it. If
Yeah, I have it up. I have this on my iPad and I'm looking at you on my computer.
Hold on. Let me change my virtual background to none. Okay.
That's all right. A picture's not going to make that much difference. Let's just go ahead.
It looks like a street sign. Well, it keeps rotating, but can you? It's a
Wait,
Yeah,
stop.
speed limit sign.
can you see it?
there.
That's
better.
it.
That's it.
Got it. Thank you.
Further discussion? I'm not seeing, but it's also, okay, so I guess we're ready for a roll call.
Okay. Chairwoman Sims.
Yes.
Okay. Alderman Gould.
Yes.
Alderwoman Nancy Parker Tice.
Yes.
Alderwoman O'Neill.
Yes, sure.
Okay. 4 yeas, 0 nays.
Passes.
Okay.
Great. Thank you.
We'll put it on the warrant list.
Yep.
Yay.
All right, item 11 is we're back to citizen comment. Are there any citizens who wish to address the committee?
There are none.
Okay, then at this point, I entertain a motion to adjourn.
So moved.
Okay, everybody in favor, say aye.
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 Is that what we do, or do I need roll call? I never remember.
No.
We're adjourned.
Yeah.
Sorry, public
You all-
works.
See you in 7 minutes.
Okay.
Most of you.
Everybody.
Bye.